Time for the ETF report. ETF sales in Canada have been outpacing mutual funds. And in the first quarter of this year, total assets under management have passed $775 billion. That's ETF assets, with ownership skewing towards younger investors. Let's get more from Eli Yufest, Executive Director of the Canadian ETF Association. Thanks very much indeed for joining us.
Thank you for having me this morning.
That's a lot of money, isn't it? More than $750 billion in ETFs now.
Indeed, it is. And just to give a bit of context around that quantum of money, in 2026, we saw actually record inflows in January and February. And so the wind is at the Canadian ETFs back. We're seeing record inflows. And to your point, 775 billion ETF assets under management in Canada.
And you reckon your association, the members, represent about 96% of ETF assets in Canada?
Correct. So our association, the Canadian ETF Association, represents all aspects of the ecosystem, everything from the issuers, capital markets, exchanges, custodians, even the lawyers and auditors that support all of those functions. And so, yeah, we represent, in terms of membership, 96% of the ETF assets under management here in Canada.
But a lot of money. This is fascinating. So the Canadian ETF market, as we've said, something like $770 billion, massive. But Canadians own an additional $250 billion, $250 billion in US listed ETFs.
Correct. And so incremental, to your point, to the $775 billion that are invested here in Canada, Canadians have incremental to that, in addition to that, invested $250 billion in U.S. listed ETFs. And there's a number of reasons why they're doing that. And this is really, in large part, the focus that the association is trying to address. There's a lot of sort of tax and structural and regulatory issues that drive that flow to the U.S. And so, you know, money like water finds the path of least resistance. And so we're seeing Canadians are choosing to invest in American listed ETFs because, frankly, they're oftentimes better off doing so from a tax and regulatory perspective.
Wow, that's interesting. What would the tax advantage be? Can you give us one example of a tax advantage of going with the US listed ETF?
Sure. So I'll take a quick step back. Last summer, the association, during the pre-budget consultation period, submitted a number of ideas to try to level the playing field with the United States. And so the simplest example that I can cite is in Canada, management fees are charged sales tax, HST. To my knowledge, we're the only jurisdiction in the world to charge sales taxes on management fees. And so I often cite the example when I'm talking to regulators or the government. You know, if you're standing at a street corner and you're looking to fill your car up for gas, and one gas station on one corner has the gas for $1, I guess maybe it's a bit more nowadays, $1.50 a liter, and across the street it's $1.51. Where do you choose to fill up? And of course, inevitably, 9 times out of 10, the answer is I go to the place that's 1 cent cheaper. And so HST, or sales taxes on management fees, is just one example of the tax burdens that the Canadian industry face that American issuers and fund managers do not have to face.
You also, members of the industry, are frustrated with dealing with multiple securities regulators in Canada?
Exactly. So that was another one of the submissions that we made during the pre-budget consultation. I mean, if you sort of think about it, we have 13 regulators, each with their own fees, taxes, regulations that our fund managers have to comply with. And so if you juxtapose that against the U.S., there's really only the SEC in the U.S. that fund managers have to deal with. And so we're at a regulatory sort of overkill situation here in Canada, where we've got 13 regulators all coming up with their own rules, their fees, taxes, regulations that our fund managers have to comply with. And of course, inevitably, going back to the point and the question that you were just asking me, those funds often get passed to investors, and that increases the likelihood that Canadians will continue to invest in American ETFs.
Interestingly, the mutual fund industry, well, of course, they themselves have plunged into ETFs. They've seen the writing on the wall, but they must have noticed that younger people skew towards ETFs.
They do. And so at a macro level across Canada, 22%, so let's call it 1 in 5 Canadians now own an ETF. And so that number skews higher among younger Canadians. So 1 in 4 younger Canadians own an ETF. And if you look at sort of, where older Canadians, 55 plus, they skew much higher towards mutual funds.
And where Canadians age 55 plus are buying ETFs, it tends to be through an advisor?
Exactly. So a majority of Canadians age 55 plus will buy through an advisor, and younger Canadians are more do-it-yourselfers. They're selecting to purchase through discount brokerage channels, and so they're opting for the let's call it self-directed approach.
Right. One suggestion you have for keeping these assets with Canadian providers is starting some kind of a new a Maple investment TFSA. So that would only let you buy into Canadian listed securities?
Exactly. And so we're proposing to the federal government to do one of 3 things with our current TFSA regime. We love the idea or the concept of a TFSA, but we know that about 60% of Canadians hold cash in their TFSA. And when they hold cash, it doesn't do them any benefit, and it doesn't do our economy any benefit. And so the name tax-free savings account implies or suggests, because of how many Canadians hold money or cash in their account, suggests that it is probably a high savings account. And of course, that's not the case. And so the first thing that we're doing, the simplest thing that we're suggesting, is just throw the word investment in there to suggest to Canadians that they have to actually invest the money in order for there to be a benefit with that account. So that's sort of thing number 1. Step number 2 is to allow a higher limit in your TFSA if Canadians invest in a Canadian listed ETF. And so, if the allowance this year in 2025 or 2026 was about $7,000, increase it to $10,000 or $12,000 if you invest in a Canadian listed ETF. And third, we're asking the federal government to match a portion of those incremental contributions like they would an RESP. So 20% up to $500 a year. And so the association has been, modeling out what that looks like from a cost and benefit perspective to the economy and what it costs, the government in terms of revenue. And we're going to be sharing that with the government in the coming weeks to try to get that program off the ground.
Sorry, when you say match contribution, do you mean as they do with an RESP, a registered education savings plan?
Exactly.
Right.
Exactly.
Not an RSP.
Oh, sorry. I meant RESP. Correct.
Oh, thank you.
So
Thanks.
match like an RESP.
Right. That's an interesting idea. Thank you very much, Eli, for joining us.
Thank you for having me.
Eli Yufest, Executive Director of the Canadian ETF Association.